Welcome back. Here with the Diwali special edition of Money, Money, Money. We are in conversation with a panel of experts to figure out where can you invest to maximize your wealth in Samvat 2073. So we've been talking about equity. And Nilesh, I want to get back to the conversation. SIP is the right way to go, but then the questions always come in mind. In a portfolio right now, looking at the market environment, should you be having a higher concentration of large cap funds? What's the right mix between mid cap, small cap, large cap, and that whole search for alpha, so-called alpha generation in your portfolio? How to go about it?
So currently my feeling is that over next 12 to 18 months, small caps will give better outperformance compared to large or mid. And the large and mid gap will be very narrow. Maybe large cap will outperform a little bit, maybe mid cap will outperform a little bit. So the best way will be if people can invest into multi-cap portfolio and allow the fund manager to choose the allocation between large, mid and small. If you are very conservative, then maybe large caps will be more suitable. If you are very aggressive, then small and mid caps will be more suitable. But if you don't want to take any chances, then a multi-cap portfolio will be far better.
Okay. What are your caveats or what are your thumb rules for investing in a small cap fund? Because that's where the degree of risk is also higher. Obviously, hopefully higher returns as well. But what should one keep in mind?
So in the small cap business, you need to be aware that you are going to get some failure. It's impossible for you to predict future. So don't invest in just one or two small cap and hope that they will become large cap. Buy into a portfolio of small cap, preferably a fund if you don't have that kind of money. And then whichever small cap keeps on doing better in terms of performance, you keep on adding more of that. Hopefully that will allow you to transit from a small cap to mid cap and mid cap to large cap, making lots of money. But don't be that illusion that I will pick up a small cap which will eventually become a large cap. That doesn't happen that way.
Ashish, your thoughts on generating more out of your equity portfolio? So what's your sense?
So if you look at the way markets have behaved over the last year or so, the mid caps as a basket are showing a bit of overvaluation. I mean, expectations clearly are running ahead of prices. So if, let's say, the earnings don't revive for a lot of these mid cap names, you could have a sharp fall in prices. So our views, it's a good time to give money to managers in multi-cap formats, because it's best for them to decide, whether they want to allocate to large caps, mid caps, or small caps. Further, although we are very optimistic from a 2 to 3 year perspective, I think in the near term there are several, events and headwinds, and that could create volatility in markets. So it's not a bad idea at this point in time to stagger your investments into equities.
Okay.
So that's what,
I mean, the SIP approach, which is what Nilesh was just talking
SIP
about.
approach, or for HNIs who already have capital with them. I mean, for salaried investors, who get regular cash flows, the SIP approach will work. But for, let's say, HNIs or alternate HNIs who already have capital with them, for them maybe an STP over the next 3 to 6 months will work extremely well.
Okay. Prateek, speaking of HNIs, how critical equity is as a component when you're doing their overall portfolio planning, looking at the current market?
See, for many of the HNIs we deal with, it finally boils down to what their goal and objective is. If there are people who are really looking at equity allocation from a growth perspective, then of course it becomes quite critical. But for many of the families we deal with, they're more looking at wealth preservation, because their risk is really which lies within their businesses. In that case, the equity allocation tends to be a lot smaller, which is there. So I guess the overall quantum of the corpus which is there, as well as the goal, determines really what allocation would an HNI want to make towards equity.
Sure. So, Nilesh, coming back to some of the basic thoughts. Now, given where we are today, what are your preferences in terms of sectors? What are your own preferences? You mentioned small caps might do better. I mean, it's bottom up, I'm guessing, but usually there are themes that have been working in the market. Tire stocks have been doing very well. Gems and jewelry had a bit of a good run in the last couple of weeks, and then there was a little bit of cool off. Coffee prices hitting, I think, 2-year highs. So anything that really stands out in terms of a flavor?
So one, we are seeing certain sectors where there is turbulence, like technology. The commentary of the management themselves is a little bit cautious, and they are all great companies available at good valuation, but they are going into a turbulent weather. Maybe the time to buy them will be later, not today. Then there is
There's telecom, speaking of
like telecom,
turbulent sectors.
where there are big players fighting out for setting up the rules of the game. Now it's maybe these are great time to buy, but I will rather wait and figure out what the rules of games are before making investment. Then there is investment related sector where courtesy the high debt burden, courtesy the delays on execution and little bit of restriction in terms of availability of financing is all resulting into little bit of slowdown. So my focus will be towards the consumption sector, where I believe because of the good monsoons the rural economy will support consumption. Because of lower interest rates and easy availability of finance, there will be rapid consumption. The 7th pay commission and one rank, one pension payouts will give money in the hands of government pensioners and employees, and they will go and spend. So all these things will push consumption.
So consumption also has so many different parts to it, What part of this consumption basket do you like? For instance, we've had a couple of players in the quick service restaurant category, I'm not getting into names, where concerns came up, where, the question was that is urban consumption growth slowing down or not? Then there is rural consumption, there is the two-wheeler side through which you can perhaps play it. So how to play this consumption story?
So essentially, if you take a call that in 2010 when 6th pay commission was given, people would have bought automobiles and that's available in data. In 6 years' time, they are likely to replace it. So automobiles, auto components, people financing automobiles and auto components are likely to do well. The second thing is related to when you get a lump sum money, probably you will go and buy another house, you will do home improvement. So sectors which are related to this cycle, it could be paint company, furnishing company, cable company, consumer goods company, or it could be cement and cement products company, or it could be housing finance companies providing that finance for home improvement or home purchase. You
don't think their valuations are too high? I mean, the market has been in love with housing finance companies for a while. But do you think there's still more value?
I mean, as of today, housing finance as a percentage of our GDP is probably 1/10 of what is there in American market. If I see outside of this mall, which is quite prestigious, there are people staying on the footpath. So they all need home, and we can only give them home through loan rather than through equity.
Okay, so we're going to talk about this. We'll continue the conversation on the other side. Sectoral funds, thematic funds, will they be a big play this year? Should they find a place in your portfolio? And how to decide when there are certain red signs associated with your mutual fund? When should you switch out? Some of those talking points coming up after the break.